Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Friday. It's been a long week, don't you think? Well, we got some news, so let's hurry up. Go to the charts yesterday. What a doozy of a day yesterday. But then they recovered the whole thing. Can you believe that? I thought that recovery, I mean, we've done this a number of times post-pandemic, but I thought that that one was particularly crazy. Anyways, they bounced like right off that 4170 level, which was kind of like a key gamma level where the gamma flips. So lucky them. I was really like, I was sitting there in chat and I was like really hoping for fireworks and it bounced right there. Oh. Now, treasuries were taking a dive yesterday too. It kind of looked like a big order came in, but then ever after that, it was like on the rise and they actually ended up higher. So probably big sell order coming in and then like end of month buying meta order the other way, perhaps. Just a guess. Also, you can move this. You continue to see this thing where like, on the knob spread, for instance, it doesn't move very much, but in the 2s and 10s, it does. So here on this move down, it steepened considerably, but then it flattened back out. Oil taking a big hit this morning. Not really sure why, actually, to be honest. But I didn't read I kind of brushed over the news today, so we might want to go back and look at that. Gold and silver, kind of flat. Copper's always doing okay. It's always kind of doing okay. Should be in copper. Copper's the new world monetary system, it seems to me, guys. I don't know. And then, yeah, the dollar just getting creamed yesterday at points, but today, reverting. So you're going to get like end of month rebalancing today, a lot of it, because, you know, the end of the month happens to fall on a Friday. So we're going to get these numbers out. The game plan here is we're going to get these numbers out. Let's look at the numbers, by the way. So we're looking for USA Core PCE Price Index. This is a very important number for inflation. So we definitely want to pay attention to that. But then we're also going to get things like employment costs, personal income, and personal spending month over month. So especially for us over here in the treasuries, there's going to be some key data coming through that we're going to want to pay close attention to. But then, as I was kind of saying, there will be a flurry of trading. And then everybody is going to move on to what do we have to do for the end of the month rebalancing. So there was some concern that the dollar was going to get sold going into the end of the month. But so far, that's not what's been happening. So maybe it's all okay. Turn on the text to speech here. See, Pierre, as always, firsties. Good job, bro. Blow my nose here. I guess one last one I should note, Bitcoin seeing a little bit of a decline yesterday, but today recovery, so good for them. Still kind of having trouble since that drop from 60K. I don't know if it's over yet, though. It seems to me that it's probably not over and that they're holding pretty well. Powell on Wednesday. Base effects are a reason that 12-month readings will be high. You'll see that in PCE inflation later this week. Yes. Well, the month-over-month core PCE price index is expected to be spot 3. I think it's going to be higher than that. They're expecting personal income month-over-month to be 20%, by the way. Can you believe that? That's a little cray cray. And then what? Spending? 4 spot 1. Note though, previous month it was negative, so Okay, so we're getting personal income month over month actual 21 spot 1 versus a forecast of 20 spot 2. And the PCE year over year was 1 spot 8. Where's the month over month? Consumer spending 4 spot 2. So these numbers are coming in pretty close to in line. I don't get the price index month over month. Where is it? I keep forgetting to turn on my financial juice. Spot 4. Spot 4. So a little bit hot. Just a tad, though. And they're not reacting to it too strongly, although the E-mini did sell there. Are you familiar with fractals? First, I don't know what you're talking about with the first question. Are you familiar with fractal risk ranges? So I'm not. That sounds like garbage, to be honest. But we shouldn't say that without looking into it. So I thank you for asking the question. It's something that we can definitely look into and test for you. I don't know. The word fractal is kind of always gives me a little bit. So I'm really, really into the fractal stuff, you know? But most of the retail indicators and stuff that I see having to do with that aren't really actually using the mathematical concepts. It really irks me. Okay, well, so there was a little bit of a decline here in the treasuries. It looks like they flattened a little bit as they did so, especially in the 5-year. Wouldn't mind buying that up a tick, but oh well. I would rather trade it in the 10. See, like that right there. They're going to have a hard time getting past 30.5. Good morning, Win. How are you? If I search for fractal risk ranges on Google, it doesn't. The top ones are about fractals, but not the thing that he mentioned. Maybe I have to put it in parentheses. Somebody talks about it on Twitter. There's a website. Man, that is not something that is very common. Quantitative risk ranges? Oh, so I think when you're saying have you heard from Hedge you must be saying have you heard of Hedge because that one pops up at the very top. Okay, so the risk ranges model uses price, volume, and volatility to determine the likely immediate term daily trading range for publicly traded assets. Okay, so I would say I have a video. If you go onto the channel, you go into the channel, there is a video called using VIX projected ranges, I think, something like that. You'll be able to find it pretty easily. You just go to the channel and you start searching, scrolling down. And that talks about how to estimate the range for the day based on the options, based on the VIX, essentially. And those levels are incredibly useful. The relationship between implied volatility and realized volatility is kind of tenuous, but it ends up being such an effective guide for, with the day traders about which levels kind of matter and where things kind of flip around and stuff. So you can use that. If you really want to go deep into it, you can use Spot Gamma is another website. Although I have found that so many people post the Spot Gamma levels these days that it's almost like you don't have to buy the subscription, which is kind of funny. So those are pretty good measures that do essentially what this guy's thing claims to use or claims to do. And I'm a little skeptical that their little model thingy would do better than just the VIX. To be honest, we could do a study about it and see, does their projected ranges match up better than VIX projected ranges? Let's see. It was using VIX projected range. Here, I'll find it. Or no, not speculatorset.com, youtube.com/speculatorset. I was thinking about the indicator package by the other day, by the way. I'm like, maybe we should change that. Like, I think that the bigger issue is that a lot of you guys just do not use NinjaTrader. Implied volatility targets. There we go. This is the video. So this is how I would look at volatility. Now, the other side of that is that I have my own model I've developed that tries to sort out people's positioning. I have found it's a really good measure of, like, are we having an up day? Are we having a down day? Or is this like a really strong update or really strong? You know how there's kind of like, there's like this, it's in the middle. Nobody really has an advantage. Okay, buyers kind of have an advantage. And then it's like buyers are just completely in control of this thing, right? And my inventory cost basis indicator is really good at that. Now, I found that I don't rely on it as much as I did, just because now that I've been watching it for so long, I tend to have a pretty good idea of where it is and where those levels turn. And it doesn't seem to me that the model is accurate enough to pick things to like specific price, but it does a pretty good job. So you can also use that one. Kind of helps. It makes a good filter. Like I've had some success with doing indicators where it's like, this is a really good strategy, but only when we're really trending in one direction. And you use the inventory cost basis to determine when we've crossed that threshold, and it works pretty well in that respect. $30 a month, I don't know if that's worth it. It doesn't sound like it's a bad service, though. But I don't know. I would look for it. So one of the things that bothers me about services like this is like, show me empirical evidence, right? Like, show me here's my projection, and here's what they end up being on average, and like plot them out on a scatter plot and show me what they actually are, you know? Yeah, Witten found it too. Did I move my microphone? It seems like it's further away from me. I'm going to move it up a little bit. How about that? Well, it's curious to me that the E-mini fall down on that report. Was there something I missed? Let's see here. Core PCE 1.8 versus 1.8. Oh, you know what? Also, we need to turn on the robots now. Okay. Core PCE price index was spot 4, which was slightly high. Personal income month over month was 21.1 versus 20.3. Personal spending was 4.2 versus 4.1. Employment cost index was spot 9 versus spot 7. PPI, Canadian PPI, year over year, 10%? Really? Huh. I am not quite sure why they reacted that way. Zero Hedge, personal savings rate doubles to 27.6% from 13.6%. As a reminder, 90% of this surge benefits 1% of the population. Hold on a second, it's a little hot in here. I wonder if my... Nope, I guess not. I am feeling I'm feeling woozy, but just a little like tired, I guess. One of the big stories today is that Joe Rogan totally agrees with the medical experts about both the risks and benefits of vaccinations. But so let's see if we can make it seem like he doesn't. And our good friend Patrick Rooney over at Trading Technologies saying stocks on edge. I mean, in general, the concept of risk range is to model the daily ranges instead of using ATR for potential. Well, I would agree with that. So, Stefan, I have not found ATR to be a super reliable metric. So I've gone in and I've done things where, you know, if the average true range is above a certain level on a daily chart, then you simply don't want to use certain strategy at all, and I found it useful for that. Otherwise, I don't really use it. And ATR, like particularly on short time frames, seems to be ineffective. It's like it's always too late on short time frames. You know what I mean? By the time that ranges are increasing and you can kind of extend your targets, and you know, it's already happened. And so by the time the ATR is starting to show you that, then it's contracting already. It's just like, so it ends up being useless. I really think, Win, that I am having a blood sugar issue. I'm not sure if that's what's happening to me right now, though. So I had eggs and a bagel. I should be fine. I was a little hungry when I woke up. I don't know why. Could be because I haven't been working out as regularly. And maybe we haven't been eating as well during the pandemic. So I don't know. Zero Hedge tweets, "Oh, look, coin insiders have more to sell." Ooh. Dude, the coin IPO, I thought, yeah, okay. Probably, I remember talking about it on that day, like the first, on the open, they're going to buy it, like no matter what. I think I also said that they're probably likely to end the day positive, which they didn't, but I thought, okay, sure. Like, there's going to be people that are like, insiders that have held the stock for a long time that just worked there and are like millionaires now and want to get out, right? Sure. But like, this thing just keeps going down, man. And especially considering that Cathie Wood like sold Tesla to buy that and it's going down. That's the one that really boggles my mind, is like, she is really not. I mean, you really have to question her abilities as a money manager if Coinbase ends up going kaput, if that one doesn't recover back to that opening price. Government handouts in March, current transfer receipts annualized were a record 8.2 trillion. Ooh. Is Steve, are we talking about the real stock market, Steve? He's still around. He hasn't been making stock recommendations, though. I've been trying different kinds of jokes. Hey, the Apple one worked out. He made I made 2 Steve videos yesterday. Did you see it? Here? I mostly only do it on TikTok. Like, the second one, I'm not sure I can show you because it's mostly sound based. Let's see here. Oh, you know what? This one has sounds on it too, so I don't know if I can show it to you. Just go find him on TikTok. Just go to tiktok.com. Here. Just go here. You can go here and you can watch them yourself. So this is one of the things about TikTok that I don't think a lot of people understand, because they're like, I don't use TikTok. Okay. But you know that it's like a really shareable platform, right? So like, if somebody's talking about a video, they should be able to find the video and link you to it, and you can watch it just that one time, without it knowing everything about you, just opening it up in the web browser. Well, since that decline off of the numbers in the S&P 500, the S&P 500 is recovering. It kind of looks to me like they want to buy it no matter what. Like they're determined for this thing to close as high as possible on Friday for options expiration. Don't you think? I don't know. You need to work on that accent. I know. Well, like, I kind of gave up on it, to be honest with you, because I realized that it didn't matter how good I was at it. There was no way that I was ever going to fool like a New Yorker or anything like that. So I kind of decided that it just being like a really bad accent was just as good. You get what I mean? I didn't realize when I started getting into it, I was like, oh man, New Yorkers really know, like, there's like different accents from like different racial groups and areas and stuff, and they know all of them, and it's like crazy. You fooled me. Oh, thanks. Zero Hedge. No, bonds aren't overvalued. They're a warning sign. Oh, are we going to do this? Bonds are signaling that a market crash is coming. Authored by Lance Roberts via realinvestmentadvice.com. There's been much commentary suggesting bonds have gotten overvalued due to historically low rates. However, is that the case? There is no argument stocks are highly overvalued. We spent much of the past week discussing why forward returns will be lower for the next decade. Thanks, boomers. The basic premise is that overpaying for earnings today leads to lower rates of return in the future. Of course, given the flood of liquidity from global central banks, the overvaluation of markets is no surprise. However, while analysts develop various rationalizations to justify high valuations, none hold up under objective scrutiny. While central bank interventions boost asset prices in the short term, there is an inherently negative impact on economic growth in the long term. However, bonds are a different story. Bonds can't get overvalued. Unlike stocks, bonds have a finite value. At maturity, the principal gets returned to the lender along with the principal interest payment. Therefore, bond buyers are very aware of the price they pay today for the return they will get tomorrow. As opposed to an equity buyer taking on investment risk, a bond buyer is loaning money to another entity for a specified period. Therefore, the interest rate takes into account several substantial risks like default risk, rate risk, inflation risk, opportunity risk, and economic growth risk. Since the future return of any bond on the date of purchase is calculatable to 1/100th of a cent, a bond buyer will not pay a price that yields a negative return in the future. This assumes a holding period until maturity. One might purchase a negative yield on a trading basis if expectations are benchmark rates will decline further. What's this win? Oh, well, would you look at that? Traders gonna trade mugs? Yeah, get your traders gonna trade mugs in the store. Link below. Pushing rope over here. I kind of wonder, did the bonds, maybe the bonds did all of their stuff yesterday. I don't know. Anyways, let's continue reading this story. As noted, since bonds are loans to borrowers, the interest rate of a bond is tied to the prevailing rate environment at the time of issuance. However, with the existing bonds traded on secondary markets, the price is determined by the difference between the coupon rate and prevailing rates for similar obligations. The benchmark rate acts as the baseline. I'm going to read through this and just get so that we get to the point, because I think that that's a little bit too much detail for you guys just listening to somebody read it to you over YouTube, huh? As shown, the correlation between rates and the economic composite suggests that current expectations of sustained economic expansion and rising inflation are overly optimistic. At current rates, economic growth will very likely return to sub 2% growth by 2022. Did I just hear my new squawk say something? Hold up. Hold up. Yeah, no, it's maybe I'm just hearing ghosts. Flip through your TikTok and found you holding the MIG on one of those, so I linked it, but the link looks wrong. No, I think it was right. I don't know. Nobody cared anyways. Actually, no, I never looked. Let's go look. I don't think that the people on TikTok would care very much. They haven't gotten in, you know. They're not part of the crew yet. What the heck? Why is my Brave browser default a picture of a llama? You see this? Look at this. That's a default. What the heck? Okay. And it's like a llama. It's not an alpaca. Alpacas are cute. Llamas are kind of mean. What's your favorite scanner? Oh, that's an excellent topic because I don't use a scanner, right? You see this little market analyzer down here? That's everything. That's everything I need to know. Because in futures, there's only like a dozen instruments. You can just watch all of them, right? I don't day trade stocks. I do have a watch list for stocks too. If I'm really diving deep into the indexes and I'm trying to get an idea of which sectors are going and which ones aren't. The thing that concerns me about a scanner is like everybody has scanners. I think Financial Viz is like the most common one, right? But yeah, I don't know. How do you provide edge with something like that? You know, everybody's got to be out there like using every possible combination of scanner that you can possibly get. But what I want to know, I don't want to, you know, I'm not trying to identify a particular instrument that's likely to be trading or moving well today or not moving well. No, what I want to do is I want to understand what the economy is doing as a whole. And then based on that, I can find the inefficiencies. So I'm looking for an inefficiency. That should be something that the market is not reflecting and that you're not necessarily going to find by the scanner. But you will find it just from looking at the overall market and saying, okay, well, oil is down 2% today, but they were up big yesterday. No big deal. RTY lagging today. So the small caps and the NASDAQ are leading the way down. Soybeans, ES. Okay. Although it's only like by, a 0.5%. So it's not like huge, the end of the world sort of stuff. So and then we can look at the correlations that we just got off of that news. Although I'm still not quite sure why they sold the E-mini the way that they did, but they came back up. So I guess it's all okay, right? Oh, I guess we did. I guess we did get some people. Somebody did go and buy one of the mugs from that video. So I guess maybe the people on TikTok do care. The mug is mostly for you guys. I think, there's like a dozen, there's 24 of you or so that are just so dedicated in here every day. And I think that you should have something, I'm always, no matter what happens, I mean, I'm never going to stop. They're going to have to take me down. I'll never go willingly. But, you want to have something to remember that all by. You go, oh, yeah, I remember Seth. He was a real asshole. That's what we need. So that's why we have your Trader's Gonna Trade mug. Link in the description below. I made it as cheap as it could be. I think it's $15. So $15 mug. Is that expensive for a mug? I don't know. I guess if you went to a store and you bought a mug, it would probably be like $5, right? Unless it had something on it. Yeah, it's a little warm in here, and I don't think that the AC is going to turn on. UBS going there tweets Zero Hedge. Bitcoin is denied to those minority groups who have reduced online access. Yeah, well, okay, listen. If you're a minority group, having access to online, to the internet, is going to be the least of your problems when it comes to using Bitcoin. Right? I agree. Kathy Wood just seems to be like a lucky futurist. She's done a couple of things that I think are super questionable. And yeah, you're right. Like, she's 100% in on the Bitcoin thing too. It's just like, I could probably come up with something that is just a complete outright scam and say like, we're going to Mars, and she'd be all in. We're going to Mars and we're going to make so much money, guys. Come join us in our investment. Hey, Kathy, I've got a bridge. It's a fancy futuristic bridge that we're going to build. Do you want to invest in our bridge? That just reminds me that, so the video I made last night, I keep talking about the square root law of market impact, and I feel like I talk about it too much on TikTok now, but because I don't think anybody cares, but I just keep bringing it up because I don't think that all these people in Bitcoin would make the investments and trades that they are if they understood the square root law of market impact. So there's this whole thing that who was it? Dave Portnoy was basically saying, "Hey, Tesla, you sold your Bitcoin to spice your earnings. Like, come on." And Elon was like, no. We were testing liquidity. And like that one, hearing him say that just kind of makes me a little bit mad. Like, probably he doesn't know any better, but like, you don't need to. Okay, listen, people have done like $1 billion transactions in the Bitcoin markets before. Okay. Like, it's a thing. It's been proven before. So like, to come in and say that you had to prove it is just ridiculous. It's just ridiculous, right? 2 million more $1,400 stimulus checks issued this week, the Treasury says. Oh, that's good. That's a lot of money. Hey, Bill, how are you? You're a little late today, man. What's up? You sleep in? Are we okay? He probably just didn't want to listen to me yap during all of those, key economic numbers that kind of looks like didn't end up being that key. I don't know. Had to get my beauty sleep. Oh, well, I wish I was there to see you because I'm sure you're beautiful. Do I look beautiful today? Because I feel like shit. I mean, I don't feel like woozy or like actively like, but I feel like it's been a long weekend that I'm tired and that I want to just, not do anything today. But I've got stuff to do. Oh man, at work, I had developed this script to like handle people joining and leaving a particular internal service, right? So we're trying to work out a way for it to run. And it interfaces with Active Directory, which is like a real issue because having an automated process that does that stuff, there's not like very good ways to do it set up right now. So I'm like using Concourse, which if you never use Concourse, it's like a build system, but it's like the most basic kind of build system, and it's all command. It's really weird, okay? And I can't get it to run my script correctly. Like if I can get it to run a PowerShell script, but it says that every line is an error. Oh, I was like racking my brain yesterday trying to figure out what was wrong. I couldn't find anything about what would be causing that. And I'm gonna continue down that hole, so I'm not looking forward to today. No rest. Got stuff to do. Cable on the defensive after failing to break one spot form. Can anybody explain to me why they use cable to describe the British pound? I don't get that. Is crypto finally going mainstream? There are increasing signs it's becoming a viable asset class. Yes, because 200% gains all the time, that means it's a viable asset class. Well, one thing I would say is that it's slowed down a lot, hasn't it? Like in times past, having a high and then retracing and it not going anywhere for as long as it has would be like a really bad sign. But it's hasn't crashed yet. Hasn't crashed yet. Oh, let's go check the coin market. Fixed supply asset paired with unlimited supply assets equals always go up. And yeah, I mean, the issue with Bitcoin is that there's always going to be, well, I don't know. What's going to happen to Bitcoin, though, when they just don't mine out anymore, right? That's where I kind of start to think, That's when Satoshi comes back and reveals himself as the sole central bank of the system. He's going to be like, okay, guys, apparently we do need to continue issuing coins, so I will, on a regular basis, auction them off to people and sell them. And he will become the de facto central bank. He will replace Tether as the de facto central bank of Bitcoin. It's funny. Basically, oh yes, the central banks are so terrible. Having a board of governors with specific mandates to maintain price stability and maximum employment, that does, I hate that. That's not good because you get deflation and everything. So what we really need is we need one guy that we don't know anything about. When Satoshi reveals himself as this, yeah, a lot of people believe that. I'm surprised how widespread that theory is. I always saw this one guy and he thinks that it's Russia. I don't know. It's like, bro, you only like BTC because it makes you so many of the dollars you think it's going to replace. Exactly. Like, here's the thing. On its own, if Bitcoin was the only currency, it would fall apart. It would fall apart because the instant that you have a decrease in growth, it becomes deflationary and you enter a deflationary spiral until it just completely collapses and people don't use it anymore. Like, there's a reason why fiat currencies are inflationary, guys. You need it. If it's not inflationary, you get problems. You end up in a depression. Well, my current coin is at 12 cents. That's not bad. Tons of normies learned about technical analysis thanks to crypto trading, but they skipped the currency pairing part without pairing BTC. Nothing. Yeah, that reminds me. So there's this article that I keep coming back to. Let me pull it up. So you're talking about currencies. So there's these guys that find. Oh wait, they have a new article. No, it's not. That's not new. I wish that they posted new articles more often. We've talked about this one before, right? They went through and they said, okay, they've done a bunch of systems. What kind of strategies tend to work and which ones don't, right? And then they classified them by class. So they got Forex/CFDs, got cryptocurrencies, they got stocks/ETFs, and they've got options. So I guess we kind of fit up in here, but we also kind of fit in here. I don't know. Basically, they're not actively trading futures. So this is the thing that I'm learning is like if I go and I search for empirical research about futures specifically, I'll find some like arbitraging the index against the futures against the index rather. But not a whole lot of studies on those. And it seems to me that the robots don't work as well in futures. They're too efficient. But I digress. And then they have different categories. They got risk premium strategies, gain higher profits by accepting higher risks. In the category follow money, stock portfolio rotation, and options trading. So this is another thing that I've been noticing is like, it seems to me that a lot of futures trading strategies are basically accepting higher profits by accepting higher risks. So I would love to know more about empirical research on what kind of strategy works best for that. But if you search for actual risk premium strategies, you get stuff that has more to do with your asset allocation, right? And then you got market model system, exploited particular market inefficiency by detecting anomalies in price curves, trend following, mean reversion, market cycle, statistical arbitrage, or high frequency trading arbitrage are typical model based trade methods. So almost everything that we do kind of fits into that one, right? And then there's data mining and indicator soup. So these are, kind of similar principles, but just like going about it differently. This one way is by using data mining and machine learning, and one of them is indicator soups, which is just like combine indicators together randomly and see what you get out, right? Anyways, and then they come in and they're like, okay, how many have you done? So nobody is doing crypto with risk premium. Yeah, that would be a bad idea because you blow out because of the downside risks in crypto when they happen. They're just insane, right? Anyways, and you can see like over here, indicator soup, far and away the most popular. Actually, quite a few data mining and then market model. Anyways. And then and then they were like, which ones were successful? Like when they gave, so basically they're saying that if somebody came in and asked them to do a risk premium strategy with options, that 96% of the systems that they were sent worked. Sergio says, good morning. Yes, good morning. So for crypto, what seemed to work? Market model seemed to work. Data model was okay. Indicator soup was terrible on cryptos, though. Kind of interesting, huh? Interestingly enough, though, it's like the market model worked really well on options, which, you know what that says to me? That says that all retail traders are trading moving averages and all of these things on stocks and everything else. And so those edges have basically been arbitraged away but they're not sophisticated enough to be able to do it on options, and so those inefficiencies are still there in options. That's what that's saying to me. That's saying to me that the options are just not as efficient, right? I was wondering with Forex, what's the most successful ones? Risk premium and market model. Yeah, okay. Lots of people out there learning about technical analysis, and I don't think that any of what they're learning is actually useful. I don't know. I guess there's a lot of things in trading that I wouldn't understand if I hadn't first learned about technical analysis, but it doesn't help me in my entry signals, I don't think. But maybe I'm doing a lot of that stuff like subconsciously now, and who knows? Yeah, I just feel sleepy today, man. Zero Hedge tweets JP Morgan's market views flip-flop, not by the day, but by the hour 1 week ago. Kolanovic says by the dip 1 day later. Lakos Bujas says our bullish conviction is now lower. And in today, Kolanovic is back with buy in May and go away. Is that how much with entries, but it paints a picture? Yeah. Understanding the current state of the market is important. It is, yeah. It's just people think that they have a percentage chance of predicting things. No, they don't. Though really not much helps with entries. I don't know. There's some order flow signals that you can use that you can use them as entries. I don't know if they're really going to be great entries, but they definitely make good entries. So like, this is kind of one of the things that frustrates me, is that you can come in and you can look at it and you can say, okay, there's a big order. There's not really any big orders on the DOM right now, so it's kind of hard to point to a specific example. But you can come in and you can say, okay, if they're going to hit into that, that's a good spot to take it. Yeah, well, yeah, it can be, because like you kind of skew your risk reward. Like if it's going to go like right there. So you can get in and it should never go against you. And if it goes against you at all, you can just get out. And so it should be like a free, no risk trade. But it looks like there's too many people doing that sort of thing now. It doesn't work. If you try and get in some of those spots, it's like more likely to chop you sometimes, unless they're like really anxious to move. Every signal you can possibly get can mean one of two things. Or three. Yeah. No. Yeah. This is totally it. Yeah. Well, I think that the real problem comes down to that if you are a large trader and you're trying to execute something, okay, all of these retail day traders trying to front run your order are adversaries per se, right? You can look at all of these things, and because there's more than one way to do things, you can basically look at what it's saying and how the market is reacting to it, and then go, okay, well, because the majority of the retail traders are doing this, I'm going to have to flip it around and do this. And the issue is that we probably won't be able to see the things that they're looking at to determine that, so you can't really actually predict which way he's going to do it. And to some extent, they probably make it random. You know, it's probably like, well, today I'm feeling like, using limit orders. So let's just use, I literally think it's like that. Like they have a couple of different algorithms and he's like, pick one at random. Man. Well, I sure hope that after we open up that things get interesting. I don't know. Given how far down we are from yesterday, I think that we should have a pretty interesting day. But for the moment, the market looks pretty flat. And I feel like falling asleep. If you think about it from a utilitarian aspect, the trade activity seems random in futures because the people who matter are using them in concert with other activity. Oh, right. Well, you're right. The people that they're really designed for are like the hedgers and stuff. Yeah. Does that give you arbitrage? I mean, the arbitrage methods that I've always looked at involve some sort of way of deriving what the price of an asset should be, you know? Like we can come in and look at the S&P 500 futures and we know what it should equal because we know what the index is right now and we can just look at all of the individual constituents and calculate it together, right? You could stand, maybe I should stand up. Because I just feel like if I just, didn't say anything and I wasn't like engaged, I would just be like... wondering, like it's making me wonder if I took my medication. How's your blood sugar? I don't know. I need to get something to look at it, I guess. Huh. Relium Prime Blood Glucose Monitoring System. This is something that like can get really expensive or be really cheap, huh? But I don't feel woozy at all. I just feel sleepy. So that kind of suggests that it's more neurotransmitters, right? Did I not get enough sleep? Maybe that's it. But it could also be that I forgot to take my Adderall. I don't think that that's the case. I'm pretty sure that I took it. That could also be that it's just a really boring morning and my brain is kind of fighting it and it needs some dopamine to keep it going, Send some blood over it. I can see this now. Like I'll take a little blood sample, put it into one of those little things. I've been known to pass out on getting my blood taken. Maybe that's also related to blood sugar. I don't know. Anyways, and then Pierre is going to use it for something sinister, right? Like he's going to clone me. Opened up the door and all of a sudden I'm standing there. Uh-oh. Something bad is going to happen. New meaning to blood coin. Wait, is that a coin? What we need to do is we need to make a coin. I want to make butt coin because there's a butt coin subreddit, but there's not actually a butt coin. You can pick up a meter or some blood glucose strips at a local pharmacy. See, I was telling I was like, let's test the theory. We'll do the thing. Because I was kind of feeling a little yesterday too. Like I had a Cliff Bar. I usually will have a Cliff Bar before I work out. had a Cliff Bar and I had a headache. And I'm like, did eating the Cliff Bar like spike my blood sugar? And I clone you. I got Steve. Yes, you can have Steve if you you can have him. Oh man. You might want to see a doctor. Well, the issue is that I don't think that I'm experiencing anything that a doctor can really help me manage. Like, I think that this is happening really more because of, like, my own bad habits, possibly. I don't know. But we're still not 100% sure that it's a blood sugar thing. I would say that it's in line with the symptoms and that we have a pretty good theory for why it's causing it, but it just means I can't have sugar for breakfast, right? Blood pressure. Okay, so that is probably another factor. Is my resting blood pressure is a little bit high because of one of the medications I take. The sleepiness, though, this is a neurotransmitter thing. So, like, ADHD brain, if it's doing something and it's not getting the neurotransmitter reward that it wants, it basically, like, shuts down. It's not just sugar, it's your carb intake. Yeah. Well, I had a bagel this morning. Is a bagel's bad idea? Is having a bagel a bad idea? I should have eggs, bacon, and a banana. A bagel is bad. Yeah, it probably is. But that's what I'm saying is, like, when I was getting woozy, I think it was because I was having oatmeal with brown sugar in it. So the brown sugar was what was killing me. It's like you eat it, the brown sugar goes into your blood almost immediately, but the rolled oats doesn't. And so the blood sugar spikes and eats away everything. And since you don't really have anything in your bloodstream anyways, do you get what I'm saying? Like, probably anybody, if you woke up and all you did was eat a shovelful of sugar and then didn't eat anything else, you would probably start to feel not so good. Bagels, like any grain, convert to sugar, yeah. Still cooked oats, yes they are. I feel way better when I do still cooked oats. Like anything that, like, I really do prefer. The thing is having the, man. So it's a really weird thing. So I haven't been working out as much as I probably should. So that's kind of a different thing. But, like, there's kind of this strange divergence. So you really want to have the low glycemic index carbs. Is that what they call it, right? The stuff that takes your body a long time to break down. Yes. But for weightlifting is a lot of energy. It is a lot of metabolic energy. So you also need a lot of carbs. Getting all of your carbs from those really clean, good carb sources and having a lot of them is super hard. It's super hard because those foods tend to be more filling and tend to take more effort to eat. You know, like you really got to chew them up, and you know, it's like a marathon. So the reality is that I do supplement some of my carb intake. with, more available carbs so that I have the energy when I work out. Using local honey improves your immune system? I've also kind of been wondering, like, am I not going outside as much, and so I'm a little bit more allergic this year? Do you have your own hive? Really? You do bees? Are bees doing right? Okay, so here's the open. By the way, we don't have any other economic reports today, do we? Oh, we do. We get Michigan consumer sentiment at the top of the hour. Okay, well, that is an incredibly tight open. Very mixed. What's Jake Sherman saying? Jake Sherman, good morning. Want to highlight some new reporting from Punchbowl News about Liz Cheney's position in the House GOP. Cheney's relationship with GOP leader is continuing to deteriorate. She is losing support from senior Republicans. Republicans are telling us they are being asked about her back home. People are complaining about her ability to run the House R messaging apparatus when she is a message if you agree with. There is already loud chatter about people calling for another vote on her leadership position. Thank you. Get rid of her. Looks like a buy, but limited at the moment. Could go. And that looks good. I probably could buy like right there. Why not? We'll try one. I'll even be generous and take it up there. Okay, well, a little bit of iceberging in the treasury there. The treasuries just look like they're gonna buy again today. We could actually, I'm gonna try one here. We can just kind of put that one in there and leave it alone. Let's get rid of that. Okay. It looks like they want to go. They're just not quite doing it yet. Large sell order shows up there. Canceled. Did he cancel? Canceled. So that has happened like 2 or 3 times this week now. This spoofing. Where it's like certain kind of order shows up. It's only there for a second and then it disappears. Yeah, good. Okay. I was thinking about it, like I was like, well, if they're going to be spoofing, and probably then why would he be doing it? He must be trying to actually make it easier for him to buy, so we should just try and buy it like when it disappears and it goes through the area, right? But like, and I'm like, well, so why didn't you just trade it that way? But then I was like, oh, actually I did trade it that way. And yeah, I'm wondering if there's like somebody new in the market that's deciding to do this sort of thing, because the way that it comes in and everything kind of seems a little suspicious to me. Oh wait, what happened over here? Oh, okay. Okay, I get it. Maybe it was a little too late on that one. curious. It seemed like there was so much buying before, and now it's like there's none in the treasury, that is. Looks like a nice big upcoming. It might be. It does look like that they're gonna to move to the upside a little bit more. Or at least that's what I think is gonna happen. But I'm also suspecting that the action may be somewhat subdued until the news at the top of the hour, right? So probably some of that end of month flow that I was talking about is still in waiting. Oh, we got Kaplan is going to be speaking. I didn't know that that was on the calendar. You're getting that little liquidity vacuum at 132. It's pretty extreme there. They're only putting like a few 50 contracts and so forth on. Who's shorting? I don't know. No, if it's shorting as so much as just like going sideways, but I could be wrong. Okay. Day trading is hard. It's like, it's a rookie spoofing. Yeah, could be. It could be. I was feeling sleepy again. It's my eyes like, You know, shake my legs a bunch and bounce around and keep myself awake here. Progressives press the Biden administration to act on a long-stalled requirement that Washington clamp down on Wall Street bonuses. Ugh. Is that the one where they talk, where it's like if you're not meeting certain metrics, you can't raise bonuses? Stick, how are you? Was been wondering where you been yesterday or the day before, because I was looked into more of that fat tail stuff, and it looks like you were right, but it looks like that the whole nomenclature around tails, the way that the mathematical practitioners talk about it and the way that like everybody else on the internet talks about it is apparently a little different. So I think for the purposes of our conversations, we should go with Nassim Taleb's definition. Yeah, I noticed the title of the VOD. Oh, yeah, we did put it in the title of the VOD, yeah. So I think we should say that if that tail is a tail that doesn't happen very often, but when it does happen, it's such an outlier that it affects the data set. While what I'm normally talking about, where the number of times that you get outliers is more than you should expect from a Gaussian distribution, we should call that a long tail. Even though those two things, I think, would make more sense if they were flipped around. Okay, here comes those numbers. Let's pull up this so we can... Inflation expectations last time was 2.8. Oh, I forgot about Chicago PMI. It sounds like the number's good. I mean, am I developing insulin resistance, though? I don't think that that's what it is. You don't forget about Chicago PMI. Yeah, sorry, that's what I was looking at. I for some reason I was thinking it was in Michigan. All of a sudden I was like, oh no, it's the Chicago PMI, higher than expected. Actually, really quite good Chicago PMI. But you got to remember that one is released a little bit early. We didn't really see a reaction either when that happened. So I am not all on, right? Last stream, so I can go back and watch. Yeah, well, I mean, that was the gist of it. Was that his terminology seems to be like, I went and I found a bunch of articles on the internet about fat tails, and they all described fat tails the way that I did. So I don't feel bad for but I think that we should go with his definition. Just because he's smarter than me. Certainly knows more about the subject. Okay, give it to me, baby. Cool. Yeah, why not? This is looking pretty good, and since we're down from the overnight so much, I'm kind of wondering. Actually, let's just move it up to 4,200, huh? Because that's probably where we're gonna get sucked up to, unless the consumer sentiment number is like a disaster or something, which I can't imagine that really being very likely. I thought I had diabetes once, and that turned out to be extreme vitamin D deficiency, really. Well, I haven't been going outside as much, so that probably doesn't help. But I don't think that I think that I might be vulnerable to type 2 diabetes or whatever we call it, right? But I don't think that that's what I'm getting. I think that what I'm getting is actually that my cells are too insulin sensitive. Right? I get a little bit of sugar in there, and they're like, oh, we're going to get this stuff. Let's take it all in. You know? Yeah, Treasury's down on lows of day now. Actually, we can high conviction trade if I can get it. They're not going to give it to me. They're not going to give it to me. So there's actually a vitamin D deficiency epidemic in Australia since we have to avoid this. Oh, really? So that sounds pretty hot out there, yeah. All right. The dollar is actually increasing here a little bit. That's odd. Euro's just getting crushed. Yen's getting hit pretty bad too. Scott Adams asks, which type of economic system would work best for low-income people? One that focuses on human motivation or one that focuses on equitable outcomes? I think that it would be one that focuses on human motivation, but obviously some people would disagree with that. I want to try intranasal insulin. Oh, there's still a hole in the ozone. I thought that the hole in the ozone layer healed. It's a neutron. Never heard of that. Equitable outcomes is BS. It assumes everyone has identical motivations. And that's a good point, but I don't know if that really answers the question, right? I think that we could give them the benefit of the doubt. A system that would focus on fair outcomes would mean if everybody that works yay hard will make yay much. So it seems to me there are some people out there in the world that work harder than me and don't make very much. But that's the thing. The United States system, it's not about how hard you work. It's actually, we don't want you to work hard. We want you to work efficiently, right? Well, the E-mini doesn't seem to be slowing down at all. There was a little bit of a sell there, though. It's a little slip. Tough call whether we should buy that one, to be honest. People who think equitable outcomes are ideal are people who've never known someone who was perfectly fine living in poop and smoking weed as a profession. Well, but if they don't work, then they should still, not get anything. Yeah, see, I think when liberals talk about that sort of a thing, they're not saying that like everybody should make the same amount or anything like that. I think they're saying that there are some people that because they don't have the same skills and things like that, that they just don't make very much. And even though they have to work really hard, and because they have to work really hard, it's like a huge disadvantage to them because they can't do the things that would be able to give them a leg up. Like they're so busy just trying to pay the bills and being exhausted from that they can't dedicate any resources to learning a new skill. You get what I mean? That's what I think that Democrats are saying on things. And I think they have a point. But you can't come in and say, okay, here's how much work is a lot of work. Here's how much work is a lot of work, and if you work that much, you should make this much. Like, how would you say that? Because the issue is that the amount of work that you put into something is not equal to the amount of value that you're actually producing, contrary to what many people would want to believe. Again, it implies if given the time and resources, people would want to learn. But that's the whole thing, is that if they didn't learn new said skills, then they won't make more. You get what I mean? They want it so that X amount of work will result in X amount of reward. If I come in and I make videos all day, I work really hard and I make videos all day, every day, then I should always make $50,000 a year or whatever the level that they deem to be like a living income. That's what they want. The current employment conditions are indicative of the fact that if given the chance, people would sit on their butts and do nothing if someone was sending them checks. Yeah, but that's not you're not arguing. We're trying to give them the benefit of the doubt, right? So if we give them the benefit of the doubt, best scenario for what they want, I would say the best scenario from what it seems to me that liberals want is they want the amount of money that you make to be equal to the amount of effort that you're putting in. You get what I'm saying? So you could go in and you could create we'll try and do this. We'll try and do it for them, even though I think there's some big problems with it, right? We can come in and we can create work units. So we can say, this is how much work a certain thing is. Okay, how much effort you have to put into it. So if you are digging a ditch, that is a lot of physical effort. That is a lot of work units. And so, right? And if you sit on your butt, that's different, but then it's how much brain power you have to put into the task that you do while you're sitting on your butt, right? And they can game all that out and create a ranking system so that you can determine how many work points your job is getting, and then that would determine what your salary is, right? That's the way that they would do it in a socialist system. Although, well, I don't know how the Russians determined how much certain people made, but you get what I mean? So what is the issue with that? Number one, effort is not equal to value. there are people that do things where they put a lot of effort into it. A lot of effort to it. But guess what? It's completely worthless to people. There's absolutely no value in it. You know? Bitcoin is a great example, right? Bitcoin is a lot of effort. There is a ton of computing power that's being put into it. Okay, wait, hold on. We can get the numbers here. So let's... Oh, my. Okay. Okay, so the Michigan Consumer Sentiment, 88.3. Even the inflation expectations were a little higher than expected. Still not filled there, huh? Effort is not worth value. Words from speculators. Yeah. Anyway, so I was saying Bitcoin. There's a lot of processing power being put into Bitcoin for something that doesn't really have a whole lot of economic value to people right now. Okay. Certainly the value that people get from it is not equal to the amount of computing resources that is being dedicated to it. It's just absolutely ridiculous, right? So you can come in and you can grind and not produce a whole lot because there's also efficiency. Okay, this one I'm going to cancel. So that whole setup worked well, but I'm kind of wondering how lucky I was on that. So that's the first issue. The second issue is that we don't all agree on what is valuable. What is valuable to me and what is valuable to you is going to be different, right? Some people may think that certain things are very valuable, but then if the government has to come in and mandate everything, then the government basically has to make certain decisions on what is valuable and what is not. And so then what if they're wrong, right? So you're basically kind of what I'm getting at is this. When you look at a socialist or a communist system, there's a lot of problems with the socialist and communist system, right? The most obvious one is that they always devolve into tyranny. Historically, they have always devolved into tyranny. Even the proponents of communism admit this, and or realize this rather, and so that's why they're always like, "Oh, well, that wasn't real communism," right? We all know that trope. Okay. But the problem is that even if you go and you put them at, like, you give them the benefit of the doubt on, like, practically everything, okay? So they're able to implement their socialist policy. They're able to not have a government tyranny involved, that they don't send everybody to the gulags. Like, everybody cooperates and we all enter into this glorious socialist future, right? It still won't work because you cannot objectively define what is valuable in the system. There's no way for you to come away and calculate this is how much value X thing has, because value is in the eye of the beholder, right? It's different to each individual person. And the only way that you can determine how much different individuals value different things is for them to engage in commerce, is for them to buy and sell things on a open market, right? So the big issue, like the fundamental problem with socialist systems is that you would need to have some supercomputer that can basically do what the stock market does for you, right? This is why they actually kind of love these like the models and stuff. It's just the issue is that when you really dive down and you understand trading and the economic models that we have, you realize that this information like literally cannot be calculated. The only way that you can do it is by going through the system. It is a fractal system, which means that you can't say X iterations out, what is it going to be worth? Because as it goes, as the price changes, that affects everybody's perception of the value, and then that gets used in for the next iteration. So the only way that you can calculate it is from people engaging in commerce, in free, open commerce. That's it. It's the only way. So these socialist systems will never work. And people want to believe that, oh, well, the computers, they're doing all of the trading for us. Nah, listen, all the computer is doing is getting in line first. It doesn't know what's going to happen, okay? Nobody really knows what's going to happen. People come in and they see the news and they try and make determinations off of it like we do, but like there's limitations with that too. The literally only way to do it is to trade through the system and see what it comes out with. And that system isn't necessarily efficient either. There can be inefficiencies that last for days, This is the way that, and there will always be inefficiencies of some kind. Right? To say that the robots are going to completely take over and that there can never be any humans involved, it suggests that the market will be 100% efficient at some point, which is just impossible. So that's why you need free markets. And in order to have free markets, then you have to have all of these other things, right? You have to have a free market in labor. You have to have a free market in everything else. So when you take it, once you understand that, then we can come back and we can say, okay, liberals, here are the problems that you actually see. And let's say that they actually are problems. Like, I do believe there are some people in the United States today that are working hard and they're not getting their money's worth for their labor. They're being exploited, right? And I would argue that in most of these instances that we can identify, that there is an unfair, unbalanced market dynamic at work. So in this particular case, because of the way that we do labor, the employer has an unfair advantage in that interaction. So you don't get an actual fair market price for labor. Well, there are things that you can do about that. Unions were actually a pretty good solution to that until unions became their own market inefficiency, because the unions had so much power that they became their own interest. And then, so that didn't really work out. Okay. But the ability of individuals, you know what, if everybody reported their income, let's say that everybody's income was reported to the government and was searchable on a database so that you could go in and you could determine how much your labor was really worth on the marketplace today, maybe things would be different. I don't know. What do you think? You know what I mean? If there was more, freedom or to negotiate with your employer, ways, you gotta give labor something. It would hurt the stock market, by the way. It would hurt the stock market, but I think you kind of want to give labor something to be like negotiating power when they're going up against their employer, even if you're just small people, even if you're just working at McDonald's, right? But can a supercomputer understand value? It needs the human touch to be able to value. Yeah, I don't think it does. Like when I look at this, a lot of these systems are basing value off of the value of other things, right? Or they're just looking for patterns, or they're just getting in line first. High frequency trading is basically about getting in line first and then managing the risk of the adverse excursion. That's it. That's what like real market making systems are. So that bought back up pretty aggressively. No, not true. What, on the market making systems? I mean, there's different layers, but in my opinion, the thing that really makes something HFT is they get in a good spot in line. Of course, what you want to do is you want to build layers on top of it, right? So first you get something that gets a good spot in line, but then you also have something that compares the value to something else to say, how in line is this, so that you don't end up taking a trade in an area that's like just really stupid, right? And then you include news sentiment, like retweeter, and determine what people's sentiment are for the day. And you have, it's like layer upon layer upon layer. Liquidity providers look at the big picture with designing optimal liquidity provision. They're gonna do layers, but like in my thing, like the primary edge for a lot of those systems, though, it really is their spot in line, right? It's their spot in line, but then you gotta keep in mind what is the big downside to those strategies. The big downside is adverse excursion. And so they have everything is basically designed around dealing with the risk of the adverse excursion. Oh, hey, I had a little blood blister on my finger and it just rubbed off. That's cool. Well, yeah, that's why it's high frequency. That's the whole point of it. But market making is different. Yeah. Anyways, but the point is these robots can't do what a lot of people think they do. And quite frankly, like human market makers, human day traders that are really good at this, a lot of them are not doing what a lot of people think they are. So market was doing pretty good there. The consumer sentiment numbers were pretty good. They did move up on it, but it was kind of limited. They've come back the last 10 minutes. We'll see what's going on. Like Google DeepMind, oh my gosh. Well, I think it just goes back to the larger retail trader mentality that like I can read the pattern in the price, and if I have a sophisticated enough analysis, I can tell you exactly where it's going to go. It doesn't work like that. But the way, they're not saying that technical analysis can't help, but the ability for it to predict future price movements is extremely limited. How you get the autocorrect on your phone, I see. Well, it was a fairly decent decline in cumulative delta on the way back here too. So a lot of retail traders talk a lot about the algos similar to how we talk about God. Well, I just think of it like when I'm doing this thing that I'm doing here, where I'm just trying to take a tick, and I'm like, you know what? If I was as fast as the algorithms, it would be like I couldn't lose. It would be like I couldn't lose because if you're able to take it at every price, and then especially if you're able to take on a little bit of risk, adverse excursion, and everything. Because especially in the treasury, by the time that like you're realizing that it's like really against you, like you're realizing you get plenty of time. It's just there's plenty of flow that's going to come in ahead of you for you to know. It's crazy how they think about them, really. Yeah. Well, when we're sitting here thinking about it, it's almost like how can you possibly think that? But they've been told for 100 years that that's how it works. That some people are savants and they just know exactly where the market is going to go because they can see the patterns in it, right? And it hasn't been until the 80s that they were actually able to really truly like analyze those patterns. And then they're really truly analyzing those patterns. Yeah, I'm kind of like, that's a little bit further than I expected them to go, and I'm not quite sure what I want to do about it. Anyways, lost like my entire train of thought. Oh yeah, wasn't until the 80s and 90s that we actually had the computing power to be able to test all of these things. And then what did we find? There were some patterns, but was a little, not very much. And once people started trading them, they didn't work anymore. Oh, so that means that you can't accurately. They're like this. The whole thing, like going back to the socialism thing, is that if you're able to detect some sort of crazy pattern in markets and then you were to try to institutionalize it, it would change because everybody would have to know and take into account that particular thing, and it gets arbitraged out of the market. Algorithms don't manipulate the market on this grand scale, people believe. Well, yeah, and you know what? I will admit that initially I would get mad about the way that algorithms or large traders would manipulate, quote unquote, manipulate the market. But what did we find? What we found is that because of certain properties of limit order books, that this kind of manipulation, although possible, is extremely high risk, and that smart traders like really don't do it. Right? Except for the spoofing thing, I guess. But for retail trading, I think the spoofing thing kind of ends up being a wash in some ways. Well, I don't know. I thought that was a pretty good excursion on the downside, and then they just flipped right back up to the high on almost nothing. So we kind of continue to have this market in the treasuries where it feels like sometimes it's just too easy for them to move. Stick says, yeah, I remember you doing that, Seth. Yeah. Well, and in all fairness, when we first started out, there certainly was a lot more algorithmic fishiness about. But it's just I once I really learned more about the markets, the more that I was like, okay, in reality, it doesn't make sense for them to try and do something like that unless they really know something. Ergo, we should be really cautious about reading particular flow and just saying, oh, that's manipulation. Because the reality is that somebody that big wouldn't be executing that stuff unless they knew something. If they're smart, they won't be executing that stuff unless they know something. So it's either they know something and you should go with it, or they don't know something and it's just going to be a wash anyways. Well, I didn't realize that when we came back up here that things got thick. Look at 6Ks on all of those levels. Was it like that on the other way when we came down? It's kind of funny how when I did this, I got it all right and almost perfect. But then in the end, I screwed it up anyways. Okay, so E-mini's still kind of struggling since they hit the highs for the last 20 minutes or so. Kaplan, we've got real excess in the housing market. So I'm wondering if treasurers are reacting to something that Kaplan said, but then don't think that none of his comments should really matter. It could just be like a short-term thing. I don't know. And they have another version of Jigsaw up. Let's go check that out. What's Taleb's take on standard deviation in the markets because he complains about it? Well, I think what Taleb is, the whole point is that if I were to say he has an overarching thesis to his work, is that a lot of models in markets are being used particularly for things like pair trading that are based on a faulty understanding of the statistics. And so they're coming in and they're saying, oh, these two assets, they're correlated or they're linked together and they're co-integrated or something. But the analysis that they're doing doesn't factor into the fat-tailed nature of the market. And so when those outliers come, it completely demolishes their system. And so essentially the entire market is extremely vulnerable to tail risks because we don't appropriately factor them into our mathematical models. Now, I don't know if he has an answer for what you do to take advantage of that, but Yeah, you can't do regression either. So there's been a lot of studies where they're trying to use regression to determine what the next day is going to be. And once you understand the statistics of it, you realize that it's nonsense. This is never going to work. Even though like least squares method for doing a regression line seems to have some amount of meaningful efficacy, it's just like if you do it long enough, it's going to screw you over because of the fat tail. Basically what it comes down to. Been working in the office most of this week. Didn't miss anything big with the channel. Nothing too huge. Yeah, I've been kind of practicing some things. I guess I kind of screwed it up today. Maybe I should just like bail on this and get back on track with practicing this. But yeah, the past 3 days or so, it's been difficult. I had one on Wednesday. It was really good, but Thursday was kind of a struggle. So I don't know. The equity trading has been okay. It just didn't turn out yesterday, which is okay, I guess. Okay, so I can see here. It seems like, things change for people in April and May, don't you think? So this has been in the past where it's been kind of a little light in April and May, and then it's come back. I kind of wonder why that is. I keep thinking about this over here, like, when should I take it and not? Like, how much volume do I realistically need for this to work out? Because when it's, like, really going, it can be great, but that's very, very rare. So then I'm kind of pushing the envelope sometimes, and I think sometimes that's why I get these things where it's like, you've got it right, but it still ticks against you. Was VIX looking like that at the moment? Well, I'm too lazy to go and open up my actual VIX data. It looks like our upside targets is above 4,200 and the downside target is about 4,156. I was kind of watching this and I was like, oh darn, now they're going to take off. But then I realized, but I never got out of it. We're good. Do you know any tips on how to land a job in the quantitative research field? Well, I don't know if I'm the right person to ask that, just because I worked for a bank, but I didn't work with the quants. I worked on the execution side. But what I will say is, but the other reason is because where I worked, the people that do the quants are like the best in the world. So, but most of these people, they had degrees in like financial mathematics, not programming, right? So that's the thing that I would say, is that the ability to actually understand and develop new groundbreaking mathematical models for markets is more important than the ability to program them. So if that's kind of the direction that you want to go, that's what I would consider. I'm looking to get into that field myself. Don't get a finance degree is one good tip. Well, no, you want to get into I would either be getting a math degree or I would be going to a school where they're specifically talking about financial mathematics, mathematical finance. I don't know what they call it. There are places in, all this stuff that I talk about where I'm like this, the square root law of market impact and that stuff that universities teach that. And the people that were getting those jobs learned that stuff in university. Like the stuff that I'm kind of teaching you guys is like the intro to market microstructure. Yeah, there you go. Financial engineering or behavioral finance. There you go. I'll show you one course. Oh, okay. Yeah, because I've been thinking like, okay, so if I become a Garlic Coin millionaire, what am I going to do with all that money and all that time? But then it came to me. I was like, you know what, Seth? You should go back to school, do the quantitative finance stuff, and then go and try and get a job as a quant. And go back and do what you should have done in the beginning instead of just being a programmer. Okay, well, so the E-mini had a pretty good test of the high, but they didn't break through it. They pulled back on the first test, which makes sense. So I'm just kind of a little mad about this last little treasury trade because it's like the initial spot that I picked was bad, but then I had the overall thing right, so I got it, and then I was like, well, since I did this, let's let it run, and then it came all the way back against me. So I kind of turned it away from what the original intent of the trade was, because really when I was looking at it, I wasn't trying to make a bigger call on whether it was going to go up or down today, and really it should be able to go up and break the highs, and I should be fine, So I made a boo-boo. I wasn't disciplined there. This is what I think it really comes down to. It's hard to be disciplined because you sit back and you're like, oh yeah, but it's going to go down, but it might come back on me a tick. So let's get one here, and then work it out. Yeah. Let's see here. Financial mathematics and statistics. Unit outlines will be available. Sure. Is that, I don't know. I'm not so sure that I know enough about it to say. So one of the issues that I've had is that I've been doing a lot of what I've learned has just been search SSRN for stuff and read studies. That's what I've been doing. And one of the things that I'm finding very difficult is that there aren't many studies on what we do here in futures, and the studies that do exist aren't particularly relevant to what we can do as retail traders. So like it really turns out, I think, like people say, 95% of retail traders lose money. Okay. Because they're retail traders and this and that. But then when I actually start looking into it, it's not just because they're retail traders. It's because what we're trying to do is just really effing hard anyways. And even if you were doing it at a professional level, you have a hard time getting it, right? that the futures markets are so efficient, essentially, and so unpredictable is what it comes down to. So there's not a ton of really useful empirical research about inefficiencies in the futures market itself so much. You'll find stuff about pair trading, and you find stuff about market microstructure, and that's all really useful. But, in terms of your ability to turn it into a strategy, it's a little bit questionable. Well, the treasuries sure are expanding the range. They expanded on the downside. Now they're expanding it on the upside. It's kind of like a V-shaped move. And it's a little unclear where it's coming from, although you do see it's because of some changes in the dollar and everything. Being self-taught is a big plus to companies since that proves you're really interested in and will be working more. Yeah, I don't know though. The issue is that some of these mathematical concepts are really complicated. Man, the treasuries really truly are thick today. Oh, that's not what I wanted. Fetch. Okay. That was a bad misclick. To love inspires me to do statistics. So you definitely have to learn it, yeah. The question is just if we were going to try and develop a strategy here, like a new strategy for trading treasury or equity index futures with minimal risk on an intraday basis, is there a study out there that would give us a good starting point for creating such a strategy? And I've learned a lot from reading those studies, but they're not just going to hand you the strategy, unfortunately, right? Anybody that finds something like that, they keep it to themselves. So, there's a lot of research you got to do on your own. Going in and doing the empirical research just kind of makes you realize our limitations, essentially. All the things that people think we can do that we aren't actually doing. Man, that come back so fast. Okay. Well, that's one that you've got to bail on, right? So didn't hear anything on my news squawk. Man, I'm getting really whiny, aren't I? It's because I was doing so well, and then it's in 1 minute, British. What's the difference between a statistics degree, a data science degree, and a financial math and statistics degree? Well, I think you want to go into the financial math stuff. So I'm sure that they're all applicable. But I think that what you really want to do is you want to understand the mathematical models that are already widely in use. The quintessential example being Black-Scholes. Okay, it seems to me that from a quantitative perspective, that one of the best places for you to mine for edge right now is in the options market. We talked about this before. It's the options data is just not very available, and it's a big headache, and so I don't want to do it. That's not where I want to go in mine. But it seems like that's the most inefficient portion of the market right now, right? Black-Scholes is the fundamental basis of all options market making strategies, right? How does Black-Scholes work? There's some calculus involved in that and everything. That's the sort of thing that you want to learn at school. So that's why I think that those financial math degrees are probably going to be more likely to get you them big jobs. Especially if you become a master's or a PhD and you write a really important paper. Right, because that's what happens is those guys, they go through school, they write a seminal paper, and then they get hired by one of the big firms. All right. Every once in a while, they'll get a quant like that, and they'll be hired at one of the big firms, and they discover something so important that the firm decides to make it available to everybody. That's what happened with Black-Scholes. So they said, this is so economically important that we should share it with everyone. So like how physicists get in the market because they bring something new. Yeah, exactly. Like I'm sure that if Nicholas Nassim Taleb wanted to get a job at Goldman Sachs, they would hire him, right? It's that sort of thing. Sorry, Nassim Nicholas Taleb. So that's his full name, right? I think Nassim is his first name. Isn't it so funny when I put an order out? I'm like, okay, let's try and sort this out. They avoid the price. They don't want to fill it. Yeah, okay. That one was a good trade. Nicholas is the name he uses to get a job. Oh, is it really? I don't know then. I don't know his name. Like if he was here on the stream in front of me, I wouldn't know which name to use. I'm not sure if it's Nicholas or Nassim. Or if we should just call him Nick. Or use his last name, Taleb. Or Big T. I don't know, man. Listen, you're watching this, Nick. Let me know. Well, I really want to know why that came back down so hard. People who had only first dose of the Pfizer COVID-19 vaccine remain at risk from variants, UK study finds. That could do it. Mohammed, if you're still here, don't do behavioral finance. Well, behavioral finance is a whole different thing, right? Behavioral finance is interesting. I'm a little skeptical about how much applicability it has to what we do. I'm actually kind of interested in adding risk here, but I think that we're so much on a tail event that what I should do is I should take a profit and open it back up here a little bit lower if it does it. Just like your question, like they're completely different. Oh, yeah, okay. Well, the behavioral finance is not going to make you a quant, right? That's not going to tell you the things that you probably want to know if you want to be a quant. Why don't have retail traders look to actually become professional traders? Good question. I think there's a reason. Okay, so now that right there, that makes me not want to touch it. I think that the market may be reacting to this Pfizer headline. So I'm not quite sure how they sort that out. So what was that, Flash? So let me read this squawk again. People who have had only one dose of the Pfizer COVID-19 vaccine remain at risk from variants, UK study finds. I believe that may have been the piece of news that pushed us down. Now, I don't know if that's a huge deal because, like, you're supposed to get 2 doses anyways, right? So is it really the end of the world? I read someone died in Hawaii after taking vaccine too. Well, a number of people have died. So, but with a vaccine like that, a certain number of people will just die of natural causes after they take the vaccine. So that one's kind of hard. Okay, so why don't they have retail traders look to actually become professional traders? Because it's a complete one, because most of what retail traders do are things that the large firms don't want to be doing. 1. 2, what they do is completely different. Okay, so Goldman, where I worked. Okay. I want to become a trader. So they have traders. They have people that put positions on and manage them and this and that, right? Okay. What a trader like that does is completely different from what we do. Okay. They do not come in and say, oh, the market's going to be up today and here's my prediction and here's the price that we want it to go to and that sort of thing. Don't get me wrong, it factors into their trading a lot, okay? But it's a very, very small part of what they do. Because what they do is they execute for other people, right? Their whole thing is somebody comes in and wants to buy X thousand worth of this, they come in and a hedge fund says, hey, we want to buy 10% of this stock. The hedge fund isn't necessarily an expert in execution. So what they do in order to reduce their execution is they pay an expert in the execution part to do it for them. Enter Goldman Sachs. They use models like the Algorand Chris model, and they, I'm sure, have a much more sophisticated versions of it that factor in all sorts of edges that they have found, and that executes it, right? So, in effect, what they do has a lot more to do with market microstructure and executing very, very large orders, right? So is what we do as retail traders really applicable to it? Well, I mean, it would help. It would help, but it's not like if you were a really good retail trader that you would be really good at trading on one of those desks, right? Okay. Next one. Hedge fund. So hedge fund is much more like what we do, right? Wrong. Because a hedge fund is so large that they can't really make an appreciable amount of money using the kinds of methods that we do, right? So that's why hedge funds are often more focused on strategies taking advantage of inefficiencies in terms of which companies you invest in, and you go long on some and you go short on some and you use leverage to increase, and that's how you generate your alpha. And there's all this portfolio theory, or you build a grid system, or things like that, right? So here again, it's not like what you do as a retail trader isn't applicable. It's a different game. It's a different game. So then you come to prop trading. Yeah, Stickball said that. Well, that's the other half. The other hand is prop trading. Okay, well, guess what? All the banks got rid of them. All the banks got rid of the prop traders. And from what I understand, I don't really know a whole lot about it. I wish I knew more about it. But like what Delta One at Goldman Sachs did, for instance, is different from what we do as retail traders, because they're trading like really exotic stuff, right? They're doing like spot swaps and all of these crazy things and setting up big deals with other people and stuff, like the housing market crash. Like that's what that sort of a thing was. They weren't necessarily just looking at the treasury future and scalping ticks off of it, They weren't. What we're doing is really more applicable to like high frequency trading, right? And the edge that the high frequency trading takes advantage of is their ability to be really fast. So here again, what you do as a retail trader isn't really very applicable. You know what I mean? So like, but then the larger deal is just the banks got rid of all of the prop firms or the prop desks. So the only people that you really get that are prop trading are like the few prop firms that like still exist, right? So like Axia and I can't remember the names of the other ones. But so why doesn't Axia go around and say, oh, hey, this speculator Seth guy he does the streaming. He looks like he's really good. We should just approach him and hire him. Well, I think that even the nature of the prop firm businesses themselves is kind of not necessarily what we expect. I think that there's a lot of, well, we're going to educate people, and if we come across somebody that really strongly has an edge and wants to utilize us, then we'll do it. But otherwise, that's like almost not even worth their time to go around and digging around for people that are good at it, because the vast majority of people aren't. And even the people that are might just be getting lucky. You know what I mean? So that's why I think it is the way that it is. Not saying that's the gospel truth. That's just my understanding of it as it is today. Maybe it changes. And like I said, it seems to me like the futures market is like really efficient, and that even some of the high frequency trading firms have had difficulty trading it, scalping it. Australia has a very big prop trading culture. You're right. I've met a lot of people in Australia into that stuff. But that's kind of where I get at, like, I am certain that you can come in and you can trade news and be pretty profitable. I'm certain that you can come in and you can trade, do arbitrage to some extent. That is just detect small inefficiencies in the market, try and take advantage of them. I think you can do that. But like beyond that, it's all like, who really knows? Are there these persistent patterns in the markets that exist? And if you have a sophisticated enough system, then you can consistently pull edge out of the market with them. Can't prove it. It seems like we haven't been able to prove it. So my take is it probably doesn't exist. Probably people just get lucky, right? That doesn't mean we stop looking. It just kind of means that we should put more of our focus on the things that we know do work, like understanding the news and finding arbitrage opportunities. Well, the dollar is taking a big jump up here, spiking up above 91. That was like the euro just got creamed there. So that might be end of month flow. Well, the equity index is going to get interesting here. So you know how Australia completely dodged the great financial crisis of 2008? Okay. I guess I'm not all too familiar with what Australia did during the great financial crisis. The global financial crisis is responsible for the regulation of prop trading? Yeah. Well, at the very least, why they don't have prop trading at banks, yes. To the larger point though, like, what if the banks still had prop trading? You know what I mean? Like, what would be different for us? Would things really be different for us? Would if there was prop trading still, and it was like a popular thing at banks? Because honestly, even before the great financial crisis, it wasn't super popular at banks. Like Goldman Sachs had one desk for that they spun off. Right? Oh, we gave $1,000 to every person. Well, actually, we did that in the great financial crisis too. In the United States, it just wasn't. Nobody remembers because it wasn't very significant. Female retail investors on Robinhood also almost quadrupled in February from a year earlier. So it's not regulated, and our bank's prop trade and prop traders came to Sydney. Oh, okay. I don't know. I guess my point though was this. I'm just thinking about myself. The skills that I myself, and I'm pretty proud with what we've learned so far, and I'm not going to say that I'm like amazing all the time and everything and that it's like sufficient or anything, but I'm pretty proud of what I've done so far. And I just don't think that the skills that I've acquired are particularly pertinent to what most industry professionals actually do. It's like a completely different game. Mostly because they're trading larger sums of money. So it wouldn't make sense for a company to come out and be like, this guy, he looks like he's really good. And nah, like they might think that. I'm sure there's, well, in fact, I know for a fact that there's people that at these banks that have watched me and gave me compliments and stuff. But it's just not directly pertinent to what they do day to day. That's why I say if I could go back and do it all over again, I would have gone to like Chicago and gotten an education in market microstructure or something like that, and then turned around and worked at one of the banks doing execution. That's what I think I should have done. But I became a programmer, which is fine too, because I'm a pretty good programmer and it's probably what I'm best at. Maybe what I really need to do is I just need to build my own platform. I go back and forth. I'm like, hey, let's try emailing Rhythmic support and see what you got to do to be able to hook directly into the Rhythmic trading API. P&L for the month of April? I mean, I've been trading Sim. I can show you what the stats are, but I just don't want you to read too much into them because there's going to be a lot of outliers in there. So let's see here. Like my recollection, in fact, is that there was a couple of winners in there that were like really excessive and shouldn't have happened. I asked why retail traders don't become professionals, implying that they had to put the extra work in to become qualified. Well, I mean, okay, so there would be extra work, yeah, and I'd be totally willing to do it. I'm just saying it's like not even the same thing, right? If you like coming in here and watching the order book and picking out scalps, I'm not saying that that's like a useless skill to people at the prop firms. I'm just saying it's what you're doing is different from what they do. The way that they even read it is different from the way that we read it. The way that they read it is like, oh, hey, I'm trying to get 50,000 contracts filled. I can get 500 there. I can get 500 there. It's a completely different thing. Not saying they're qualified right now and headhunters should be hunting them down. Okay, so let's see here. See, I think that it's going to be... Yeah. So these aren't live results, but the majority of them aren't, at least. So I did okay in April, right? I guess I say I did okay, but actually it's a little bit. I think that I actually underperformed a little bit in April compared to what I normally do, huh? Percentage winning trade 43% is pretty good. Only 25% on my shorts though. Well, you know what? Yesterday it really hurt. If I had done better on Thursday, probably would be feeling a lot better about it. My profit factor is actually really good though. So my MAE and MFE is almost double. So I'm almost to 2, whereas normally it's like 1.5. So even though I'm not making as much, apparently I'm a little bit more accurate. And especially when you consider that yesterday I wasn't very accurate at all. So that's not bad. That's not bad. There's still a few things that I'm a little unhappy about though. Now, the treasury trading is just, if you put in the treasuries, it's like dismal, right? Because what will happen is sometimes I'll come in and I'll be like, okay, let's like try taking a big bet and lever up a little bit and give it some room to run. And then it doesn't go the right way and I give up on it. And then it goes my way. So you can see here was about when I started to try and arbitrage it, right? So the 28th, I did pretty good. Like it started on the 27th, I guess, right? So 27th was just like 1, and then the 28th was okay. But then these last 2 days didn't work. And today I lost 3 off of that. No. 2. I've lost 2 ticks off of that. Which is not like the end of the world or anything, but we're supposed to be winning like 70% of the time. So I've been unable to duplicate the results of it in slow action, essentially. Maybe I just need to get it like right on the open. I'm sure that there's that action right on the open that I might be able to take advantage of. But we're probably also continue to be in an area where day to day, there's not a lot for the treasuries to be doing. It's really hard to find those little inefficiencies, It says on this one, I could try buying 31.5 and buy it back in. But since it looks like the trend is kind of reverting back down, I'm not so sure that one makes sense. And they even back out already, so. Man, my mind keeps coming back to you should write your own platform, right? Or you should get together with somebody and get involved in their platform. But I keep coming back to so first of all, we need to get access to it. I don't know if I'd be able to do that. I'd have to, like, I don't even know who you contact. I contact Rhythmic support and ask them, can I, get the API to be able to plug into it? When I was reading it, it sounded like it was a C++ and C# API to do it. So that gives me a little bit of pause too. Because the thing is that I think that there are some things that I can do at the infrastructure level that would make it a better platform. And the problem with that is, one, it wouldn't be in C#. There's already C# platforms. I don't know if I want to deal with that. But then the things that I want to do are expensive, let's say. Expensive, like, it takes a lot of work. You really got to know what you're doing. There's a lot of technical debt involved in it. It's just like the QA process is going to be really tough. Like I'm talking about doing something really serious to get a platform that is really performant. And if it's just me, I don't know how realistic that is. And I've talked to some people that are like, oh, I'd love to build a platform too, which is great, but like, if we were going to do this, I think that I would need, somebody would need to give me $1 million, basically. Somebody would need to give me $1 million for us to live on for a year to start developing this platform. And then when we were done developing the platform, it wouldn't be cheap. Like, it would have to be $50 a month, So you could pitch for investors. Yeah. Well, and then the difficult part comes in that, and I don't necessarily want to give away. Oh, shit. I got to get going. Hey, guys, I will be talk to you later. In the meantime, stay